Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook, and I'll be your host here for about the next 20 minutes here on Options Guide TV. Okay, so let's run straight to the Tradier Pro software. We're going to do some cleanup work here in the portfolio. On Monday, we talked about adding two stocks to the portfolio. Monday was a market holiday. So we taped it on Friday, but we added Berkshire Hathaway, a deep in the money call option on that Friday. So that position is in, just rehashing it if you didn't watch the show on Monday. We bought the 470s going out to June, keeping it with a lot of the different expirations that we already have here. So with this position, we are we're down a little bit on the position, about 2% on it, but that is the position. If you wanted to, take a screenshot of it, or if you're following along in your own paper trading portfolio, feel free to make note of that. Now, we also added Nucor. Now, Nucor is a big holding of a Berkshire Hathaway, so we kind of went hand in hand with it. And in the Nucor position, we are down 30% at this point in time. So the Nucor position, we're going to have to keep an eye on. If we do hit where the midpoint of the underlying stock is at 77.53, our strike is 72. So if we do come down to 72, we're going to want to close out. Oh, not on Nucor. Here it is. We're up 2%. No, we're going to close out the Netflix position. I apologize. On the Nucor, we're actually up, but we're going to close out on the Netflix position. We're down 30%. If it came down to 72, we'd hit it and get out. But here's my opinion on Netflix. And I did this also in my own portfolio, where I bought a deep in the money call option on the move down, but the WMB trade, the Warner Brothers situation, if you will, is not going away anytime soon. And I don't really expect Netflix to pop until then. It doesn't really matter if they well, I mean, I'd like to see the deal go through for Netflix. I think it would be a good thing. But the uncertainty is really driving the stock down. If it doesn't happen, I still also think that the stock can still pop. It's always traded at a premium relative to a lot of stocks in the space, and it's always been able to hold that position. So in this instance, if we get that opportunity, Netflix right now is trading at well, let's take a quick peek, just at the PE inside the platform. I think it's around 25 on a trailing 12-month PE. And FLX 30 times earning. All right. So it's still a little bit elevated, but that's not bad for Netflix. Like if you did a chart of the Netflix PEs, like over the last 10 years where the PEs have been at, which I recently did, probably should have pulled it up for this video, but this is the lower end of their priced earnings range. So I'm going to scroll out a little bit on Netflix because it's just, there's this area of support. Let's go 1500 days, click OK. This area right here is definitely an area of support. Like this is where we had the consolidation period and the strong breakout. And we came all the way back to that. The stock looks ugly as far as the 200-day moving averages are concerned. And it's all just about these negotiations for Warner Brothers. And that's the main thing that's driving it. They're not slowing down on their growth. They're still have, they're still the leader in streaming online. So here's what I want to do. I want to take that position in Netflix. We're going to close it out. We had a short call position against that in Netflix, and then that expired worthless. So at this point in time, what I would like to do with Netflix is just trade it. So open up Netflix, the 72 strike call. The bid is 1055, but it's not horrible for a deep in the money call option, which I guess it's not that deep in the money anymore. So maybe that's the reason why we're getting a little bit tighter bid-ask spread. 1082 is hard to do in a paper trading platform, so we'll go 10. Let's put it in at 1070. Right in between the bid, which is if we hit it at market, and the midpoint of the option contract 1082. And if we fill this, and I haven't done this inside the paper trading portfolio, but I did it inside my own account. I sold my deep in the money option because I wanted to double down on Netflix. I've owned Netflix for quite some time. And with the pullback on Netflix, I decided I was going to buy a deep in the money call option. It's just taking too much time for it to play out. So with that scenario, I'm actually planning on buying 100 shares of Netflix inside this paper trading portfolio. It's a $72 stock. There's no reason not to, as an alternative to just buying that one option contract outright. So that's what we're going to look to do in Netflix. Nucor, yeah, we're up a smidge. I don't know why I was thinking Nucor's at 186. This is our position that we put on. We bought the 160 call. 120 days, same expiration as we have actually on Berkshire Hathaway. All right, then Coca-Cola. So our Coke position bounced back. We gave it some time. There's 2 days remaining to expiration to get out of it. We got a decent profit on the entire position, up about 50%. So let's close that one. After earnings, we had a little bit of a pullback, and now we are profitable on the trade. Come on, I need you to move. Oh yeah, we got to close Meta too. So I closed the short call on Meta, and Meta needs to just go away. That chart is really ugly. Let's pull up Meta while I'm trying to get the system to catch up to me. META. So Meta just this from here to here. I mean, just the good old doji star, I guess, was a real good doji star. I guess they say that's usually a point of inflection on charts, and that's got a long tail on it. 740, and then boom, we've gone from 740 down to 640, down $100 on Meta. So on Meta, on that position by itself, we're going to close. We'll close at the midpoint. I'll put that in at the midpoint, and we'll adjust that trade. All right, so that order's been sent. Now, where is my Coke trade? Okay, if I click on you, why aren't you putting that in the order mask? All right, I guess I'm going to leg out of it. That is... So we'll close that position. We have those orders, and we'll make sure that these all get filled before the end of the day. We got the Netflix, we got the Coke, Meta. We did fill on the short call option. We actually did well on Meta because we didn't do well. We sold a $14 option contract at the height of the chart in Meta. Now we have this order that's just pending. And I want to make sure that we close that the Meta trade. So here we are, 355 by 340. Let's go and let's hit it at 345. 345 and close that out. And so now I'm not going to go back to Meta again in the short term. Once again, it's a longer term stock. for me on a holding basis. But if we're doing the deep in the money portfolio, our rule is if the stock comes down and hits our strike, that's usually when we want to go out. Or you could say when we're down 50% on that position. When we started, we had about 15% of owning the stock price outright. That's about our total exposure. So instead of buying 100 shares, we bought one 700 strike call. Maximum we could lose on that trade was 15% to kick the trade off. Now we're down on that position, we're down more than 15%, but it's 15% of the stock's price. So we're down almost 91% on that option contract. We brought in $13. So we're not quite down that amount in that we sold a call at the very top of the move in Meta to the upside. And so we did capture that. So we're not quite down this amount on Meta, but it's time to get out of the trade. $3.50. The other thing that we could do is roll it up and out if you wanted to stay positive, but there's nothing that I really see in this chart right now that makes you feel positive. Why did Meta get beat up? They talked about their CapEx and what they're spending to build databases, and they're basically becoming an energy company in a weird way, trying to make sure that they have enough power to drive their AI forecast and what they want to do in the AI space. So with Meta, right now, I want things to settle out a little bit. I don't want to come back in. We got some high implied volatility with this drop off in Meta. It's trading at the PE ratio is solid, and I still think that it's a longer term buy, but I don't want to jump in right at. I want to see something positive. Let's get back above at least the 50-day or the 20-day moving average, because right now I don't know on the downside. I mean, this is the bottom of the last move, and that was right at 600. A little bit more noise down here around the 580 level, but there's nothing to make me want to get right back in on that position right now. Okay, so Walmart's doing well. That's up 50%. We have our NVIDIA trade, and NVIDIA is going to be announcing earnings. So let's see. Let's go back to the chart on NVIDIA. And those are trades filling when you hear that. NVIDIA. 190 on the position. We have the earnings date on the 25th. So we are 7 days away from that earnings announcement. They usually announce after the close. Look at this noise in Meta, or I'm sorry, in NVIDIA. We're still, a good bit above the 200-day moving average. We still got the 50 and the 20-day lined up. We're just a little bit of noise in here. I need that catalyst to drive the stock higher, that catalyst being earnings. If we can bounce up above 195, obviously that would be a strong breakout to the upside. And we're looking at about 210 there. So the question would be on NVIDIA, would we want to sell a call going into earnings? You have pumped up implied volatility. And to me, especially on a stock like NVIDIA that can have gap ups and gaps down after earnings and make strong moves, I don't want to sell a call because I don't want to get pegged on this position that we have on. We're down about 7%. Not that big of a deal. Still 120 days remaining to expiration. So we're going to ride NVIDIA into that earnings report. JP Morgan. Okay, so JP Morgan's bounced back. We have this option that we had to roll a couple of times. It's still trading for $1.83. We have 23 days remaining to expiration. We'll let a few days erode on this one, but if I can buy this back for $1, I don't mind doing that. And then we'll let our position ride a little bit on JP Morgan. If the stock comes down to, right now it's at 310, gets down to the 290 range, we want to get out. We still got 120 days remaining on this position. And then on the DraftKings position, let's go look at the options grid in DraftKings. because we still have this in the portfolio. We put this trade on uh, heading into the earnings report. We bought the 22 and sold the 25, and we're at 23. So we came back on this trade in DraftKings. So DKNG. And I guess there's perceived risk because there are so many people coming into the prediction markets. DraftKings is also building out that business, if you will, and that was a strong point of the conversation with the CEO of DraftKings after their earnings report. Is, of course, they're saying we're going to have the best markets, the best interface, and everything to go along with it. So that space is kind of turning into a similar case with AI, where you don't necessarily, there's not necessarily going to be only 3 or 4 people that make it out of it and still, I mean, run away with the space. But there are a lot of big names that have came in. You have Robinhood, you have the CME, which that stock is actually rocking and rolling. The Chicago Mercantile Exchange that is looking to join that marketplace too, and they definitely know how to make markets. Actually, CME is an interesting underlying stock. Look at that move to the upside. Had positions on this in a few other portfolios that I watch and manage for the public. And I actually don't, this right here, let's pull on down. This is, speculation on CME. It trades at a decent P. The only thing that's weird about CME that I don't like is, man, I have troubles getting filled in this underlying. It should be fairly liquid. You would think that they'd want to make good markets in the options for an exchange, but it's really been a battle. So we had the strong move up, and we've had to pull back down around the 300 level. And I do think that we're ripe. Let's actually make this a paper trade this week, because I did put this trade on in a different trading portfolio. So let's do this. I don't mind that trade. DraftKings were at 23.45. We got 23 days till expiration. We'll keep that trade on. I was thinking about trying to close this out. The midpoint, we sold this option contract for 64 cents and it's trading for 74 cents. And I think it's mainly because we have too many days remaining to expiration. So we'll let this one wither away a little bit more. I don't mind closing that out if it gets low enough, but we are losing money on this option contract, but we're going to let this bounce. We're going to let that one bounce. Let's look at DKNG. And let's pull up this right in here. Yeah, so 3 solid up days. Wonder if it wants to fill the gap. That'll get us back to 25. If we can maintain, this is obviously earnings, the drop off. They had strong earnings. As a matter of fact, they said, as far as the betting around the Super Bowl, it was the most money ever bet on any Super Bowl. And it seems like every year they keep setting that record. Still in the KO trade. All right, Kurt. Well, hey, good morning, Kurt. I see Kurt just actually put a little thing in the chat box. Let's toss those up. All right, so I would close the KO trade. You only got a couple of days remaining to that expiration, right? And we put in our closing order here. Yeah, it's hard. There's nothing in the chart. It obviously has been volatile. You're getting a very extended relative to the 200-day moving average here. Are you profitable? You should be close to profitable in the trade. And it's a 50-50 trade. If it goes out 2 days remaining, you don't want to get assigned on the 170, or this is the in the money cost. So we got to make sure that order gets filled. $252, $253 price. Okay, so let's hit it at, let's buy the 240. 240. And so it's trading at 240 right here. And we will send that to the floor. We'll make sure that that gets filled. Yeah, I would look to close that trade, and I'm froze. There we go. So let's go back and let's look at CME. And here's a trade I like in CME. You can get some good premiums. We'll go out 9 days here. And we're going to sell the at the money. No, let's go out more than that. Let's go out 30 days. We don't have earnings. They've already announced earnings. We're going to go out 30 days. We're going to make this a longer term position. We're going to sell something fairly close to where the stock is at. So if we sell the 300, we're going to bring in 1090. And this is what I mean by the bid-ask spreads. They're a little bit annoying to me. They should be tighter. The CME's got decent volume. And it kind of annoys me that, but if I'm going to do this, I'm going to work this trade, and I'm going to sell put spread to try to stay bullish on CME. Let's go 290. Yeah, that's not bad at all. Let's hit the bid. All right. And go down to the 280 and buy the ask. 310 for a 10-point wide spread, and we are 10 points out of the money. So you're bringing in a third of the width of the spread. That's good premium, right? That's solid premium. $300 stock helps in this situation, but this has something to do with volatility skew. So like I said, I like the markets in CME. I don't like how wide the bid-ask spreads are. This one in particular is annoying to me. Open interest is 110. But I've been able to get fills. So if I'm going to put it in at 310, I would start at 320 on this one. If you get 320, that's a real solid fill. 10 points out of the money on a 10-point wide spread on a stock that has solid momentum to the upside. And it's, usually a boring stock. And it hasn't been recently because of news headlines, and I don't think that this is going to go away anytime soon. CME. That's interesting. It looks very much like the Coke chart. So let's pull this out. We're, like I said, we're fairly extended from the 200-day moving average. Kind of like it. I like it to have a bounce back. I don't know if I want to do this on a down day today, but today's the day. I'm going to send it to the floor. I might wait until tomorrow and see if we get I kind of want it to stop its movement and kind of put a line in the sand here. We're all the way down to here to the 20-day moving average. But I'm going to make it the official pay. We're going to put it in. We're going to send the order to the floor. We're going to trade this one. 320. Okay, so now I'm going to have to hit. This is going to be bad in the paper trading account. Man, let's see if I can get 3. I wouldn't want to. I'd want to get 3 if I was doing this trade in my own account at the very minimum. With where that is at. But see, the markets are moving because they're so wide. 650 by 640, 285. I'm not going to get 3 in this time. I'm going to send it. All right. Order sent to the floor. We got our orders pending. And I do love this about the Tradier options trade grid, showing you that your order is in, showing you that you have a spread, that you're selling this one, that you're buying this one. click over to the orders tab, and you see here's our short put vertical spread. Trying to get this done for 285. I do like this trade 30 days out. Man, if you can get this done anywhere above 3, that's solid. That's a almost, $3 on a 10-point wide spread, 10 points out of the money on a stock that is usually boring after an earnings report. I like the market. If you want to wait until maybe Friday to put the trade on and just make sure that you get one green candle in there, you get a little bit of support on the downside. I think the path of the least resistance on CME is to the upside going forward. And I just like this trade overall. All right. Well, we're at time. Any questions, Kurt? Yes. Profitable. Still in the Coke trade. Okay. I would look to close it out on that Coke trade, Kurt. We closed it here officially, but it is just a paper trading portfolio. Ride some momentum today. I would maybe think about, if I had the position on personally in my own account, I think I would look at closing it at the end of the day. We got a little bit of a green. Let's see what we're doing in the markets right now. Markets have been a little choppy lately. We're up a smidge, so we got a little bit of momentum to the upside, just a tad in the markets. Almost 1% here. I can't move. It's not letting me move you over. Let's just hit SPY. About 0.8%. Yeah, I would ride Coke. Coke has a tendency to go which direction the market goes. Had obviously after their earnings report, so I don't mind looking at Coke to the upside, let it ride to the end of the day, and then look to close it out at the end of the day. All right, that's it, everyone. Good show, solid show. Thanks for hanging around. I hope you watched the video on Monday, the education Monday, if you will. Just bought deep in the money option contracts, and I think we'll keep adding to that portfolio. Let's see what we have. I mean, I think we need another financial stock personally. We got Walmart heading into earnings. We got Nvidia heading into earnings. Netflix. All right, I need to buy this stock. Okay, so I am going to actually put in an order to buy Netflix long today. And I like the stock. If you were going to speculate on something that, well, AI is obviously going to help them, but you're not worried about the AI spend. It was the darling of the stock market up until the point they decided to do this acquisition. But NFLX, and people were it's almost like a safe haven because just not as worried about the AI side of things. But man, that is ugly. It's almost as bad as Oracle. Oracle is another. These two stocks, if you're bottom fishing, these are my two bottom fishings. If you're going to throw a line out, try to catch a falling knife, dead cat bounce. Like, how many different analogies can we make? These are the two stocks, and I'm not looking to trade options on them. First of all, the volatility has skyrocketed. It's the only reason why Netflix is actually trading for something. Our option contract has some vol premium in it. But this Oracle, Larry Ellison has really gone into massive debt, has seen this opportunity. He's spending all this money. And if basically the marketplace is saying you're overdoing it. And in that instance, and they're also tied into the Warner Brothers situation. So wasn't that long ago, it was at 340. So speculate, and whenever you're bottom fishing, you don't ever just buy your entire lot of stock in one position. You buy 100 here. If it goes up, well, okay, I'll buy another 100. If it goes down, okay, I'll buy another 100. But if you're going to buy 200 shares, I don't want you to jump in and buy all 200 shares. But these are two positions in the stock world. If you want to bottom fish, I think, or Netflix, I feel a little bit more comfortable on, but Oracle you get a bigger discount, right? I mean, you see that it's lost half its value after the big run up, all the way back down to even more. So the high is 345 here, and we're all the way down to 140. So 280. So it's more than 280 would mean that you lost half. So we've lost more than half of that gain. But before this all started, it was down at 120. So if it hits 120, then I'm definitely buying, right? I'm going to buy this underlying at 120. I wouldn't want I would be willing to speculate at 120 that it's not going to go lower. Have a great day.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.